Hey, Dana here, and welcome to my vlog, and this is under my day trading playlist. It was time to get back into trading on a daily basis. It's the only way you're really going to make your money move. Watching a couple different, they actually come to you once you start looking for some particular item on the web. Somehow or other they get your IP number, and when you're watching YouTube, or you're watching something or listening to something, ad is going to come along, and it's going to come to you because you were looking for it. So I got looking for certain things when it comes to trading. Well, let's see if you're familiar with these ads.
For your account.
Now he's going to explain what the lot size is or the amount to trade.
I highly recommend you guys to start somewhere around that area. You can start off with 500, but you're just going to be making a lot less, so you're just going to have to expect that if you use proper risk and everything. And I just want you guys to get this and fully understand it, because you have to use proper risk, or else you will lose all your money if you do not use proper risk. When trading, you're supposed to have the mindset of, okay, I have a $1,000 account, let's say, and you're supposed to know and understand that you're not going to lose that $1,000 on a single trade ever. The most you're going to lose is 3% if you're risking 3%, which is $30. And let's just say you start off with a $1,000 account, right? And you want to use 3% risk, 3%, which is going to be $30 per trade to make up to 60. That's a 1 to 3 risk to reward ratio. $60. So you're risking 60. That's an R. To reward of 6. You're risking 30 in a reward of $60 to even $90. Or that's 1 to 2. Sorry about that. 1 to 2, or risking 30 to reward 90. Which is going to be a 1 to 3 risk to reward ratio. So let's say you start off with $1,000 again, but you're using 2% risk. Okay, so 2% risk, that is going to be $20 per trade. And for a reward, so risk, $20 for a reward of 40. So that's 1 to 2. That's a 1 to 2 risk to reward ratio. Or you can make up to 60, or even higher. We have amazing trades that have like 1 to 6, 1 to 7 risk to reward ratios, but this one's going to be 1 to 3. And then if you do like even $90, so if you do 90, that's even higher, which is 1 to 4 risk to reward ratio. So you're risking, let's say, $1 to make $4, but obviously on a higher scale. So that's with 2% risk. So let's just say you start off with $1,000 and you don't use proper risk, right? So you start off with $1,000 and you want to risk because you want to make more money, and you decide to risk 50% of your account, which is $500. So you're risking $500. Obviously, you'll have a higher reward, but that's not proper trading.
Right.
No professional trader trades like that. So
you want to stay at 1 or 2%.
1,000, which is a risk to reward ratio of 1 to 2, right? But let's say you lose that trade. Okay, so now you're down to $500. Obviously, you're going to be, pissed off and stuff like that. But that's why I do not want you guys using 50% risk at all. Anywhere near that amount, like I said, the most you should risk if you want to be a professional long-term trader and do it for the rest of your life is 3% max. I do not want you guys risking more than that. I guarantee you guys, if you risk more than 3%, you're going to have a hard time with trading.
Right.
So I want you guys to only risk 3%. So let's just say you start off with $500. Okay, how do I find out my risk? Well, 3% risk is going to be $15 to make 30, or to even make 45. So this is a 1 to 2. And this is a 1 to 3 to make 45. So risk 15 to make $45. So that's on a $500 account, right? But let's just say you want to risk 20%. Well, that is not a good idea because you will blow your account if you lose 2 trades in a row. So let's just say you risk 20%. So that's going to be $100. So you're risking $100 to make, let's say, 200. Obviously, the reward is nice and you want to get that big reward and win a huge trade. But let's just say you have 2 losses in a row. So now you lost another $100. So you lost here, L, and you lost another one. So now you're down to $300. I'm sorry about my handwriting, but I'm doing it on a mouse. So now you're down to $300. So now you're kind of pissed because you lost 2 trades in a row, and now you think, oh, this isn't going to work for me. I do not want to trade anymore and stuff like that. Well, that's because it's on you, because you used 20% risk. And no professional trader that's been doing it for over 10 years now does 20% risk ever in their life. They will never risk 20% of their balance on one single trade. Like even 3% is a pretty high amount, but with 3% you can still have some playroom with that. So when you guys start off taking our alerts, I want you guys to use 1% until you get confident with trading, like you know how it all works. And I don't mean that by taking your own trades. I want you guys to fully understand how our alerts work. So like we do have amazing trades here. Like we have 85 pip reward right here, and I'm going to be explaining that to you right now. And I'm sorry I didn't get to lot sizes yet, but I'm going to be getting into that in a second. So ignore that. So we do have amazing rewards right here compared to what we're risking. So basically we risk pips and a reward of another amount of pips. So let's just keep it very, very simple. So let's say 10 pips, risk. So that's risk 10 pips. So 10 pips, that is worth, just to keep it very simple, is worth $10, right? For a reward of 20 pips or higher. So that's a reward of $20 now. Now we're at $20, right? So we risk 10 pips to make 20 pips. So that's $20 or more. So if we're talking in those simple terms, these 85 pips is basically $85. So 85 pips is $85. So we're risking, let's just say 10 pips, which is $10, to make $85. So that's a risk to reward ratio of 1 to 8.5. because you made 8.5 times more money than you risked. And that's how we talk about risk management and whatever stuff like that, risk to reward ratios. So now let's get to lot sizes and what lot size you should be using. Well, if you haven't watched my Stinu video yet, it's an app on your phone that you can download to basically get an idea of what kind of lot size you should be trading with. One lot size is 100,000 units of currency. So when you're placing a one lot trade, let's just open up MetaTrader just to make it very, very simple for you guys to understand. So the market's closed right now, but let's just say you are placing a one lot trade. So that is going to look something like this. Well, this is on a demo. I had to put 50 lots, but one lot, when you're putting that on MetaTrader, right there up top, that is 100,000 units of currency. Okay. So when you click buy, you're buying 100,000 units of currency. But when you click sell, you think the price is going down. So you're buying the opposite currency. So in this instance, you're buying CHF, 100,000 units of CHF, because you think the US dollar is going to gain value over it. So the USD CHF price is going to be going lower because the dollar is going to be worth more. So if it goes down to, let's say, 90 cents, then you're in profit because you bought the opposite currency. So you don't really need to know this because following alerts is very simple to do, and you don't need to be knowing, like, are you sure it's going to fall? Are you sure it's going to, something like that. But that's just in simple terms, buying and selling a currency and how it is with one lot size. And if, let's say, you do 0.10 lots, that is going to be 10,000 units of currency. So that's 0.01. And I just put 0.10, but it doesn't make a difference if you put 0.01. But a micro lot is going to be 0.01, not 0.10. And I'm sorry if I actually made a mistake in the previous one. But 0.01 is going to be 1,000 units of currency, and 0.001 is going to be 100 units of currency, which you can't really trade that on the MetaTrader 4 app. And if you guys are using a different software like Forex.com and trading strictly on that instead of MetaTrader, that's perfectly fine as well. But you just do basically the same thing. So you just got to know that one lot is 100,000 units of currency, and that's how Forex trades it, Forex.com, that broker. But you can use, obviously, any broker we have, we use KOT4X, Hugo's Way, and stuff like that. So that is basically what a lot is. And let's just say 5 lots, that's 500,000 units of currency. So you're buying or selling 500,000 units of currency. Buy means you think the price is going up. So from 91 cents right here, you think it's going to go to, let's say, 92 cents, right? And if you think the price is going down, you think that, okay, it might hit 90 cents. So depending on what lot size you use, that's how much units of currency that you're buying. So let's just treat this as like $100,000, right? You obviously don't need $100,000 because of leverage on a broker, which means the broker is giving you a certain amount of more money than you have in your balance. So let's just say you have $100. The broker is going to give you 500 times more money than that. And that is basically how it works. So that, in very simple terms, is what a lot size is. And I fully understand that you guys might not, fully want to always check Stinu to know what kind of lot size you should be using always, because I know that takes a bit of time with every trade. And I said that in my last video, but basically you just need to know the average amount, because our average stop loss in pips is going to be like, let's just say, let's find one loss that we have here. Let's just see where we took a loss. I don't know when the last time we took a loss was, but right here, for example, we only lost 10 pips. So our next trade literally made up for that 5 times more. But anyways, right here, even 17 pips. But, our next trade, 24 pips right there. So we're in profit again. But that's what I mean. I don't want you guys, using a way higher lot size to take these kind of trades, because imagine if that was a loss. And like I said, using proper risk management, if you risk 50% and you went in on this loss right here that we had, so let's just go, where's our loss? And you went in on this loss right here, you just lost a lot of money because you risked 50% of your account on that trade. So if you instead used only 3% risk, your account balance is going to grow and compound over time instead of using 50% risk, and in 2 trades you're done, and that's it for you. So that's why I strictly want you guys to use proper risk management, and I cannot say that enough. So like I said, let's just start off with $1,000 to start somewhere around that amount, and you want to risk 3%. And the stop loss on average, let's just say 15 pips. So let's select a currency pair. It does not matter which currency pair it is at this point. You can use any. They're basically all the same, but that it doesn't matter. Don't stress about that. I don't want you guys stressing over that. It does not matter. So let's calculate it. And the risk amount, like I said, 3%. Oh, the market's closed for Stinu. But so for a stop loss at 15 pips, I just had to calculate it in my head real quick, but that's going to be a 0.2 lot size to risk those $30. And you can watch the Stinu video as well, but you only have to do it once just to know like the average lot size you should be using for your account balance. You obviously don't have to always go and check and see, okay, I need to be using this lot size now for this next trade. Okay, I need to be using this lot size for this next trade, and stress over that a lot. But as long as you get the average lot size, you should be good to go. But if you see, some stop loss being, a bit bigger than others, like this, for example, this isn't even a big stop loss. Actually, that's just 10 pips. But you can obviously fluctuate that amount, but don't go over 0.2 lots if you have $1,000 account. So if you go over, like, let's just say dramatically increase it to 0.05, so half a lot, 50,000 units of currency on a 0.5 lot. That's obviously a dramatic increase from those 0.2 lots, which is 20,000 units of currency. I do not want you guys to obviously do that with every trade. Just stick to 0.2 lots, 0.15 lots, so that's 15,000 units of currency, and just stick to those lot sizes. I don't want you guys going from trading 0.10 lots to 0.5 lots the next trade, because you're now risking more than you were here. So let's just say this was like 2% risk. So now that you increased your lot size, now your risk isn't 2%. It's like, let's just say randomly like 20%. So now you're risking a lot more. So obviously if I do the correct math, that's going to be 10% risk because it's 5 times more. The lot size is 5 times higher, so you're risking 5 times more. So simple math, 2 times 5 is 10. So you're risking 10% now. But let's just say we take 2 losses in a row, for example. that's minus 20% of your balance already. So from $1,000, you're down to $800. But if you were a smart trader, if you took those 2 losses, you would only lose 6%. So you're not down that much. You're only down $60.
So I calculated it for 3% risk, but for 2% risk, that would be $40 with 2 losses.
So you get what I'm saying here? That's what I mean by always using proper risk management. And I want you guys to always do that. Find just the average lot size you need to be trading on your account balance, and that's it. As long as you stay consistent like that, that's where all our amazing results are coming from. Like I said here, could have made $25,000 on one lot size on average, but let's just say you do 0.10 lots on $1,000 account. You still made 10 times less, but that's still like $2,500 right there on a 0.10 lot size. Or a 0.5 lot size, that would be half of one lot size, so it would be half of this amount right here. So even on a 0.10 lot size with $1,000 account, you could have made $2,500 if you used and kept using that proper risk. And I want you guys to always, always, always use proper risk, because this is something you can do for the rest of your life. Like, imagine those $2,500 extra that you made by just using proper risk. And that's it. That's it. As long as you just stick to using proper risk all the time, you are good to go with trading. Now, obviously, once your account size increases, you can increase the lot size as well. That's the cool thing about trading. Now, let's say from $1,000 you made $2,500, so now you're at $3,500. So now you're 3% risk. You can use a higher lot size, slightly higher. So every week or two, as your account's growing, you can always come back here and see what 3% risk would be on one lot, on what lot size you can do. So you can do like 15 pips or 20 pips stop loss. That's the average amount that we basically have. And let's just say now you're at 3,500. So now you can use a 3 times higher lot size. So now you can do 0.3 lots, which is 1/3 of this amount if we made that next month. So 1/3 of that amount, since that's 0.3 lots, like I said, 30,000 units of currency instead of 100,000 every single trade. 30,000 units of currency is 0.3 lots. So $25,800 divided by 3, divided by 3 is going to be $8,600. So as your account is compounding, you can slowly increase your lot size as you're still using proper risk. While you're still using proper risk.
So the only thing you should be worried about is when we trade gold, and that's because gold is worth a lot more, so our stop losses are going to be a bit bigger. So I would recommend using half the lot size if you're trading gold. And for example, if you're using 0.10 lots, if we send out a gold alert, I would trade it with 0.05, so half the usual lot size you trade. Or I would do even less than half just in case, but
this is gold too.
At least half or less. Even 1/3 would be amazing.
And continue growing your account. So if you made it to the end of this video, I am very proud of you, because you're going to be above the other people that haven't watched this video, and you're going to be knowing the proper risk now, and you're going to know exactly how to copy these trades and always use proper risk and proper lot size. And now you fully understand how trading works. I will be maybe even making another video on this just in case you guys are interested and want to see more, but I am glad to make another video, and I'm glad that you made it till the end of this one. But that's the possibilities with trading with proper risk. So I do not want to see you guys, risking 50% of your account in one trade, or 10% even, or even 5%. Just stick to using 3%. You will keep compounding your account with every trade that you win, and that's all it takes to become a successful trader.